What's going on, guys? Happy Monday. So we're getting back into the swing of things here. uh you know to start the day, things looked pretty green. Here's one thing that I always like to say, right? I mean, this is what you kind of have to think about the macro picture. We are still in a bear market. The momentum is still down. Anytime you get the futures really up, you know, when in pre-market from the after hours, and futures are high when we start the day here, always want to look for that first 1 hour rejection. If we can't really start building over that within the first 1 to 2 hours, look for that kind of a reversal. Again, another thing that I'm going to kind of keep stressing: if you're a newer trader or you have a smaller account, the first 30 to 45 minutes typically are not the best times for you to trade. What you want to see is a trend start to set up, and you want to see the confirmation of that trend. So if we just kind of look at the triple Q's ETF here, we can see we had first hours highs of 311.80, and we had first hours lows of 309 even, right? So here's one thing that we could do. Okay, if you're a newer trader and you have a smaller account, forget about the anxiety, forget about the FOMO, forget about that you're going to miss a play. Now, are you going to miss a play here and there? Yeah, it happens. Everyone loses. Everyone, doesn't always, follow their rules 100% of the time. I'm guilty of it as well. But what you have to really focus on is that, are you really missing anything in that first 30 minutes of the day? Are you really missing anything the first hour of the day? If something's going to go and something's going to trend and there's going to be a bigger move that happens, normally that's going to be after the first 1.5 hours of the day, and typically, within the first 3 hours of the market open. So are there going to be those times where, something right off the bell kind of confirms and it never looks back and you miss the play? Yeah. When you kind of look at that, is it the end of the world? No. You're still going to be able to trade tomorrow. You're still going to be able to trade the next day. So you missed one trade, so be it. If we kind of look at what the triple Qs did here, on this last hour candle that we had here, right? So if this is a 6 a.m. candle, 7 a.m. candle, 8 a.m. candle, okay? So this is literally 2 hours after the market opens, just about an hour and a half after the market opens. On my chart, what I have is the 1 hour time frame here, and my 1 hour time frame is going to actually give me 30 minutes of pre-market data. So that's going to be from 6 to 7 Pacific Standard Time. So what I have marked out here is the highs and the lows. Okay, so this second hour candle actually confirmed the highs here. And 90% of traders who got into this play here are trapped. Okay, 90%. If you are not currently trapped, you got out for a loss. Okay, now, was the setup there? The setup was there. Were we moving higher in the after hours and pre-market session? Yes. Did we take out the first hour's highs? Yes. One thing that we have to understand is anytime we have a strategy or play, technicals, we always have to respect the technicals. Now, when the technicals tell us it's time to exit the trade, we need to exit the trade. So this trade long here on the triple Qs only went from about 311.80 up to a high price of 312.36. Now, that's only about a 50-cent move, and unless you're a scalper who's playing heavy size, 9 out of 10 traders did not sell on this move. Don't get me wrong, this is a very, very hard move to try to sell on. More than likely, you got trapped and took a loss. Okay, so here's the point that I want to make, though, to all newer traders. Just because you lose on a failed breakout does not mean it's time to curl into a ball, go into a shell, get scared, and not want to take any trades to the downside. You have to forget about the trade that just happened and look at what's going on in the chart next. If we start to pull back and we can never confirm those highs after that break, then we need to start thinking about changing the trend to the opposite direction. Now, when the triple Qs did confirm the first hour's lows, the wick was sitting at around $309. Quickly on the 8 a.m. candle, it dropped down to $307.90. So what we did get here was about a $1.25 move. Now, if you would have sold some profits down here closer to this candle close, the next candle attempts to make a bit of a push higher, however, gets rejected at the breakdown spot. So when this happens, we want to hold runners. We have to get into the habit of holding a runner. If the trade is working in our favor, we absolutely need to hold if the trend is in our favor. And being that the trend was in our favor, not only did we get the flush through the lows of 307.90, but we got a complete washout to 306. So this was a $3 move to the downside here. Very, very big move. If we take a look at something like Tesla, heavily traded stock, heavily loved stock. What we're looking at here on Tesla, first hour's highs being 734.97 and the first hour's lows being around 706. Now, was there opportunities to make money in between here? Yes, but your trading strategy would have needed to permit that sort of trade. Okay, so what does that mean? That means that if you don't have an actual scalping strategy to play with inside the channel ranges, I would just wait for the macro breaks. Now, if the 735 area on Tesla was the spot to the long side for that breakout over pre-market highs and over the first hour's highs here, you can see if we can't break the pre-market highs and we can't even get close to remotely confirming that, for me, and this is, I'm just speaking for myself, I am not looking to go long when we can't take out the first hour's highs. When we can't take out pre-market highs, I'm not looking to go long. What I'm in fact looking for is the setups to come to the downside, okay? So the setup that has presented itself and is still in play is the first hour's lows of 706.50, okay? So we're currently right around that area. But does that mean that there wasn't an opportunity to make money on the downside on a smaller time frame? Now let's take a look at the 5-minute. If we take a look at the 5-minute, the story kind of changes a little bit. So if we have the first push higher over to 735, and then we get the immediate breakdown, what we are looking at here is once we topped out, immediately pulled back and closed below the 20 SMA or the 9 SMA. Either one, whatever you're looking at. What I'm looking at here is the 9 EMA today. Some of you guys are looking at the 20, so forth and so forth. They're not going to be too far off. The point that I'm trying to make is that once we closed back under the 9 EMA, that price was 722. And once we confirmed the 9 EMA, we flushed from a price of 722 down to a low wick of 706 within a matter of 5, 10, 15 minutes. Now, if you did not take profits between 722 and 706, 707, and you call yourself a day trader, and now you sat through drawdown and you let this come back, that's on you. That's completely on you. That's emotions and that's being greedy. Understand you're not here to catch the whole move. You're just looking to get in, you're looking to get green, and you're looking to move on with your business. Now, again, if you kind of remember what I said just a couple minutes ago, if we have not taken out the first hour's highs and I see us setting up plays to the long side, am I going to take those plays? No. The reason I'm not going to take the plays to the long side is because if we've never taken out pre-market highs, we've never taken out the first hour's highs, why do I want to get caught and trapped on a dead cat bounce? It's not something that interests me. It's not something that I want to take part in. There's nothing here. Now, the thing that I see with a ton of newer traders or people who have come into the market within the last 2 to 3 years is everyone always wants to time the bottom. Everyone always wants to go long. Everyone always wants to think that the stocks are going to go higher. Guys, we have 2 ears, 2 eyes, 2 hands, 2 feet. If we're blessed enough, we can trade both sides of the market. So it doesn't matter if this is setting up to the long side. It never took out the pre-market highs, okay? If it can't take out the pre-market highs, I want no part of this trade to the long side. What I'm looking for, based on my strategy, is the next setup to the downside. And the next setup to the downside is $718. And from $718, the confirmation washes all the way back down to 706, which was the first hour's lows. Now, we briefly dropped below the first hour's lows to a price of around 703, which is a 3-point move. And that play is still currently in play. Now, even if we get back over this 9 here, does it concern me? A little bit, based on your strategy and depending on when you got in. If you took the first hour's lows at 706 and now currently this is breaking back over. What I would look for, even though it closes over the 9, is I've got to give myself a little bit more wiggle room and look to the left of the chart and see when was the last rejection spot. Even though this power trending move is still in my favor, what is the next area of supply where price action had some trouble? That would be in this area here of 714. If this risk of 714 on a downwards move through 706 is too much risk for you, and I understand that it's stock like Tesla, you can be down 15, 20, 25% on this type of move. If that's too much for you, then your exit would be a close back over the 9. Or if you're playing the 20 SMA, it would be a back over the 20 SMA play. But even though we are bouncing here, and I'm currently sitting short in Tesla here, and it's up, one contract is up $297. At one point in time, it was 400, closer down to the lows. If I do decide to get stopped out or exit my position, it's going to be over 715. Now, I understand that that's going to be a little bit more risk than some people are going to like to see. But for example, the last thing that I want to see is us to close at 709, 710, stall around, and then lose these lows again. I need the chart to tell me. The short-term trend to the downside is broken. We've broken the 715, and now maybe we're putting us back into this range here. And this is a range that I do not want to be a part of. Okay, so just keep an eye on Tesla as it starts to get stronger. Let's take a look at another stock here. We're going to take a look at Amazon. Big split on Amazon, a little bit of a price change. This is a little bit of a going to be a getting used to process, you know. An $8 to $10 move on Amazon now, we have to really think about it. That's more like a 50 cent to $1 move on Amazon. So before, if we were used to playing Amazon, we were looking at 10 points, 15 points, 20 points. What we're looking at now is 50 cents, $1, $1.50. You know, kind of get used to that. Amazon's not going to put in those $50 days anymore. Amazon's going to have a true range anywhere between $1 to $5. $5 being a very, very good day. Anything over $5 is a fantastic day. And $1, $2 being about a normal average day on Amazon. If we can kind of think of what it's going to similarly trade to, something, you know, that we can kind of say, you know, Amazon's going to move. It's going to move it's going to move somewhat like Apple, somewhat like Nvidia, somewhat like AMD. Okay, that's something like Microsoft. You know, those days of 100-point moves on Amazon are no longer here. But if we kind of take a look at what happened with Amazon, Amazon has actually set up one fantastic trade to the long side, and it set up a smaller time frame trade to the downside. So we're going to first go over the trade to the long side. If we kind of look at the first hour's highs here, which is the first 30 minutes of the market open, this candle closes at around 126.86. So we could use that as our confirmation to get long, or 127. Okay, so the second hour candle opens up, pulls back just a tad, and then explodes through the 126.86 and puts in a top wick at around 129. Now this is where you need to be selling into this candle, taking profits. Now could this have gone to 130, 132? Maybe. But that's not what we're looking for. If you're looking for a day trade and you're looking for a scalp and you're looking for a quick move, all you're looking to see happen here is to get long when we take out the first hour's highs. Okay? If we look at the smaller time frame here, it presented a fantastic trade once we topped out at 129. So if I was to draw a line at the high of day and then go to my strategy and say, if we lose the 9 EMA or the 20 SMA and we can confirm to the downside, and as long as we stay under, I will ride this trade. Well, then this set up a fantastic trade opportunity to the downside at 127.59. And I think I put in the Discord to the guys, I think it was 126 breakdown, which was another consolidation break, which is, if we kind of look here, this 126 line. So this was a short setup. I included this one in Discord here. 126, if we can see, I'll explain why in just a minute once I get through the first one, why I put this here. But if we look at this close below the 9 EMA, you know, 127.60. If you're using the 20, let me just pull up the 20 here just so some of you guys don't get confused. The 20 is going to be the purple line. So if we kind of look at when we closed under the 20 SMA, was a price of 126. If you were going to use the 9, you would have got a little bit of an earlier entry, but you would have had to have sit through a little bit more of a pullback here that I know would have scared a lot of people out. Again, trust the technicals. Your entry should have been 127.60, or you could have waited for the 20 SMA play at 126, and that's exactly why I put this line here at 126.86. That was your 20 SMA play. Now the play that I alerted in Discord was 126. And the reason why I used 126 is because when we flushed down after the confirmation of losing the 20, we came to a price of 126, and then we bounced. And when we bounced, we got rejected at the 9 EMA. We came back down, we came back up, we came back down. Multiple touch points here at 126. Any flush through 126 definitely had room down. And if we look at where we had room down to the first hour's lows. Those first hour's lows was a price of 124. Okay, so this line that I have down here at 124 was already going to be here. As long as we stay below the 20 and below the 9, we are going to continue to ride this trade down. Even if we get one aggressive candle, two aggressive candles, and then we see a little bit of a pullback, which means we're going to bounce, we're still under the 9, which means we are still power trending. And if this cracks 124, there's a lot more room down. I hope this is making sense. Please let me know if you're picking up what I'm laying down. That Tesla trade that I am in short is currently at $497. I'm going to go back to my Tesla trade so I can kind of manage this and see exactly what we're looking at here. I would be interested in taking some profits closer to 700 psychological level on Tesla, and my exit on this trade now becomes $710. So as long as we stay below $710, I'm comfortable holding this trade. If we kind of look at what we're doing now on an hourly time frame on Tesla, we have taken out the previous hour's lows of 706.50, which is also the first hour's lows. Yes, we're kind of trying to get sucked back up here. It's also where we opened up in the pre-market, and it's also Friday's lows. If Tesla does start to confirm the 700 psych level, it does have more room down, and it does have an opportunity to flush. This is going to be a very, very tough area here, and I would expect it to be a little bit choppy. If we kind of look at the daily time frame and see what exactly is going on here on Tesla, we were rejected at the 9 as well as the 20 SMA on Friday. Now, when we got rejected there, we pushed all the way down to that low price of 700. Today, we did make that push to try to reclaim the 20 as well as the 9 on the daily time frame, and were rejected for the second time in a row. I am telling everyone right now that there is a macro flush trade on Tesla below 699, below 700. If you want to make some money when Tesla loses 699, 700, you will take this short, and I will continue to ride my trade if this loses the 699, 700. Now, does that mean that Tesla is going to lose 699 and go down to 600? No. There's going to be some choppiness area in there. This is going to be the first loss of Friday's lows. It's going to give an initial washout when and if Tesla loses 699. Now, when it loses 699, it will put in a nice wash. A scalper is going to take the money on the initial first wash, and anyone looking for a longer day trade or swing trade to the short side on Tesla is going to have to sit through the wash, sit through the back test bounce, and the back test bounce could be 700, it could be 706, as high as 714. As long as it stays under 714, you would still need to ride this trade all the way back down. Price targets that you would be looking for would be 693 as well as 678. Anything below 678 is going to get very, very ugly on Tesla. If we kind of look at Microsoft, same kind of deal here. Microsoft currently losing the daily 9 EMA and also confirming and trying to confirm Friday's low price. Guys, technical analysis, okay? 101 here. Stocks cannot move lower and stocks cannot move higher until they take out the previous day's high and low, okay? Even if you know nothing about technical analysis at all and you know nothing about scalping, understand this. You will have a higher success rate than trying to guess if you just play previous day's high, previous day's low, okay? As stupid and as simple as it sounds, a stock will not go any higher until it takes out the previous day's high. A stock will not go any lower until it takes out the previous day's low. So what does that mean? If you realistically, and again, you will not be able to trade every day, and I understand some of you guys want to feel like you're taking 10 trades a day and you're doing brain surgery here. The moral of the story of what I'm trying to say is that if you simply wait for macro levels to confirm and you scalp them or you day trade them, you will be better off than trying to guess, when to go long, when to go short, than trying to play in between, ranges on a daily time frame. Simply wait for stocks to set up the previous day lows, previous day high. As soon as that happens and they confirm, get into that day trade, get green, close the books, go on about your business. If we kind of look at what's going on here, Microsoft is getting ready to try to take out Friday's lows. That price, if I kind of just pull it up here on the hourly time frame and move this price line here is irrelevant now. So what we're looking at is a price of around 268.36. Let's call it there. You can see Friday's lows. We touched it one time. We touched it two times. We got the nice bounce. Got the rejection spot today. Highs of today are 274.23, somewhere in that vicinity. This area is going to be extremely choppy between 274 and around 275. I'd stay away from that. Your next resistance to the top side is going to be somewhere on this top wick at around 277. The trades to the top side are going to be extremely choppy, okay? Extremely choppy. Trades to the downside look a little bit more better. I'm going to actually move this price level line down to today's low wick. Today's low wick is 268.15, okay? Give or take a few pennies. 268.15 confirms Friday's lows. This is the macro short on Microsoft. Anything below 268.15 has room down, okay? It's plain and simple. Now, keep in mind what you want to do with this trade when and if it happens, okay? So, if this trade loses Friday's lows and confirms today's lows of 268.15, are you looking to scalp this? Then you're going to go a little bit more heavier on your position sizing. 5, 6, 7, 8 contracts. You're going to get in, you're going to get that quick flush, and you're going to sell your position. Now, if your account doesn't allow you to buy multiple contracts like that, and maybe you can only afford 1, 2, or 3 contracts and you're looking for a little bit of a bigger move, understand you're going to sit through a little bit of a more wiggle and a little bit more of a chop and maybe even some drawdown. Because when this breaks 268.15, it will wash, okay? And then it will snap back. Now, what you're looking for on the snapback is when we come back into the 268.15, what do? Do we chop around? Okay, consolidate. That tells me we're getting ready to go lower. Okay, hold your position. Or do we just wash, wick back over 268 and now start to close over 268 and now start to push higher? Your max pain on this trade is going to be 271.22. That's a 20-day moving average. I would use that as a hard stop. Anything below that, I would let it work. If you want to keep a tighter risk and you don't want to give yourself $2 worth of risk on those options contracts, well, then when we break 268 and then we snap back, if we start closing back over 268, maybe 268.50, exit the trade. Exit the trade. When we lose the lows for the second time, you can re-enter that short position and take it from there. But I will tell you, previous day's lows of around $268 on Microsoft will be a nice setup. Take a look at the S&P 500 on a 1 hour time frame. Anybody who is sitting there looking for trades off the open, meaning the first 5, 10, 15, 20 minutes, you guys have been trapped. Anybody who went long is down. Anybody who went long off the open is bag holding. Anyone who went long off the open has lost, unless you took your profits on that first run up. Now, the thing with trading and what makes things so difficult is the emotional aspect of trading, meaning that when you do get profitable, that greed starts to pick up and you want to hold longer. And when it pulls back, you want to tell yourself that it's coming back. So you either take half the profits because you got too greedy and it pulled back, or you were overly emotional, hoping that it came back, and now you're still holding a long trade. Anybody who's holding a long trade right now from the first 30 minutes to an hour off the open makes no sense. I'm going to be completely honest, it makes no sense. You should have just taken your loss, flipped your bias to the short side, made your money back, plus some on the long side. Again, I know that's more easier said than done, But if you're looking to be a day trader, you better be reactive. Okay, you better be reactive. If you're going to be a swing trader and you're going to be an investor, it's a completely different ballgame. You know, anyone who's going to buy something and hold it for, you know, longer than a week, longer than a month, your strategies are completely different than someone who is looking to come into the markets, make money, and leave, close your positions at the end of the day. The point that I'm trying to make is that if you cannot flip your bias between long and short and have conviction between those two, because technically the charts are telling you, you are not going to survive. You will not survive. You will win, don't get me wrong. The odds of you winning any trade is 50-50. Okay, the stock can only do two things, is go up or down. So if you do not have conviction in your plays and follow the technical analysis, you're going to get chopped up, because you're going to take small wins and then you're going to let the emotions cause a big loss. That's going to wipe out a week's worth of gains. That's the last thing that we want to do, is wipe out a week's worth of gains because of a mental mistake. What we have to think about as a day trader and as a scalper, depending, there's a big difference here between day trading and scalping. A lot of people bunch both of them in the same kind of context, and they're completely different. A scalper is going to go heavier on the position sizing. So I'm an options player. 60-70% of the time I'm looking to scalp. 60-70% of the time I'm entering into any play with 10 contracts, whether it be AMD, Facebook, Microsoft, Nvidia, Apple, stuff like that. Okay? My average position sizing is going to be 10 contracts across the board. I'm going to get in 10 contracts, and if I get 50 cents, a dollar, $1.50, I'm out. I don't care if the stock goes down or up another $10 after that. I don't care. Doesn't matter, because I made enough on those 10 contracts that someone else is going to make holding maybe $3 or $4 on 1 or 2 contracts. I hope that makes sense. Now, if you're a day trader, meaning you're looking to hold this longer than 5 minutes, longer than 15 minutes, longer than an hour, okay? Maybe you're only playing 1 or 2 contracts on something like Apple or something like Microsoft. You're going to need a bigger move, but you're going to need to let the trade wiggle around more. However, you're going to need to have a hard stop loss along the way, so that way you don't get eaten up too bad, okay? Too bad. So if we take a look at SPY here, first hour's highs came in at 415.50. Now here's something that I want to make a point on, okay? 415.50 was the first hour's highs. If I go to the 5-minute time frame and I kind of look at these first hour's highs, 415.50, the first thing that stands out like a sore thumb is this candle here with this wick that sits at 415.63. Okay, 415.63. So what I'm going to do actually at this point is I'm going to adjust my entry to the pre-market highs of 415.65. I don't care if I'm losing an extra 15 cents on the trade. I want to know that when I get in this trade, it cleared out every level of supply. And if this trade fails, I tip my hat to the markets. They got the best of me. 415.65 runs up to a high wick of 416.60. This is a dollar move. Now, if you are a scalper, you're taking on this candle right away. You are not sitting through the chop. You are not sitting through this. Because when you think about a scalper, someone who's going larger on the position sizing, they don't need to get $3 or $4, $5, $6. Okay? So that's, I think, is a huge problem with a lot of traders when you take 1 or 2 contracts. You take 1 or 2 contracts, the stock or the index moves a dollar, and then next thing you know, you guys are holding and the stock comes back. And you give away these small gains or turn those green gains into red gains here, right? Into red losses. And the only reason you didn't sell here is because the position sizing is too small. But if you are a scalper, then you need to take a dollar move. To get a dollar move on a scalp is a home run. And I don't care if that's one contract where you won $50, $20, doesn't matter. If you can enter into a stock and in 5 minutes make 20, 25 bucks, you know, some people make $20, $25 an hour. If you can do that in 5, 10 minutes, who's better than you? Okay. Now, if you're a day trader, let's say, for example, you like to hold things a little bit more, you want to give things a little bit more room to kind of set up. What you're going to do, and more than likely on this play, was get stopped out. Okay, you would get stopped out for a cup of coffee loss. And the reason why I say a cup of coffee loss is because you're not going to lose anything that's going to damage your account. You would have got in at 415.65. Let's say, for example, you did not sell a dollar up. It starts to now consolidate, chop around. We never make a new high of day, and this now falls below the 9 and the 20 SMA. You would have need to have sold for around a 25-cent loss, 30-cent loss, given slippage. Now here's where having quick reactions would have benefited you. Immediately, the way I process this is we took out pre-market highs, we put in a new high, we chopped around for almost 30 minutes. Okay, 30 minutes, 45 minutes. We could never make a new high. Now we've lost levels of support, which is the 9 and the 20 SMA on my chart. Now that we've lost those, do we confirm to the downside? And does my strategy give me a technical setup? And it actually gave me a technical setup at 8:05 a.m. Pacific Standard Time. That price was 415.23. This play here, even if we took a cup of coffee loss on the long side, we get right back into the trade to the downside based on the technicals and the breakdown. 415.21 washes all the way out in 10 minutes to 412.87. Done. The first play, whether that was stopped out or a small loss, is now been erased by a $3 move in your favor within 10 minutes. This is why you play the technicals. And if you play the technicals to the T, then you would have sold for profits here, allowed this to bounce, tell yourself that we're still under the 9, we're still under the 20. All this is just a bear flag here. And you take the second wash down all the way to a low price of, let's say, 411 or even 412, another $2, another $1.50. We're talking about a $3 to $4 move here in a matter of an hour. Now, here's where a lot of newer traders get confused. A lot of newer traders see this big washout. They don't want to wait for the new lows. They start to see price action bounce, and everyone's looking to go long here. Everyone's always looking to go long here. Oh, it's green. Oh, that's the bottom. You know, we're coming back. We're coming back. You guys end up getting long here, and then it flushes on you again. You have to understand the psychology. We cannot think about going long until we take out the high of day. Remember what I said 5-10 minutes ago. If we cannot take out the pre-market highs or the high of day, we're not going any higher. So why do we want to go long now, all the way down here, when the momentum is now shifted to the downside? The trend has changed. We are below supply. We are not going to go long here. People see this washout. They see the bounce. Closes over the 9. They want to go long here. We're not going to go long here. I don't care if this goes from 412 back up to 415. There's no trade for me here. The emotional stress that it's going to put me through going up and down, up and down, up and down this whole way here is going to kill me. It's going to kill me. Okay? So when we do get big washouts, do not think that because, oh, this move is extended, we can't go lower. If you think a stock can't go lower or you think a stock can't go higher, you're out of your mind. Okay? You're out of your mind. Okay? So just because we had 1, 2, 3 aggressive candles to the downside, and now we start to bounce, does not mean we're looking to go long. Okay? I feel like a lot of traders start to see the 1, 2, 3 candles, they see choppiness, and right away they flip their bias when they should not be flipping their bias. When you should be flipping your bias is when we go here. High, consolidation, we never make a new high, and now lose support. Then we flip our bias to the downside. Not when we lose the first hour's lows, lose pre-market lows, and now look to go long. No way. Understand the psychology of the stock marketplace. This is a marketplace between buyers and sellers. Emotional buyers meeting and fighting emotional sellers. There is no ifs, ands, or buts, or nothing in between. All you're reading is price action. Price action is telling me over 416.60 on the S&P 500, I want to be long. Okay? Under 416.60, I don't give a shit what the candles are doing, if they're green or how much they're green. I'm not going long. Okay? We consolidated once and the S&P failed me. Why am I going to trust it down here? Or why am I going to trust the long play here? Again, I don't care if this reconfirms the 20 at 412.66 and it screams back up to 415. That's not my trade and it's not my money. I don't care about that. I'm not going to do it. What I would rather happen here, have the S&P 500 reconfirm the 20 SMA, get its butt all the way up here to 414, 415, chop around, lose the 20 SMA, and guess who will be taking that short play? Me. Okay? As long as we stay under the 9 and under the 20, the momentum is to the downside. The minute the S&P reclaims the 20 SMA here, it does have room higher, maybe $1 here. This is going to be an extremely choppy trade. It's not something that I want to be involved in. I'd rather it scream over that, chop around here, re-lose this, and then I'll go short. Our low of day now is 410. 410 on the S&P 500. Let me kind of see where that correlates with the hourly chart. If we could see the wick here starting to get bought and eat up. I would expect this area to be very, very choppy. Could finish out the day choppy. What we are looking at here is 409.46, 410.80. There's $1 room that's going to be extremely congested. Our bounce spot is all the way back up to 413. However, the momentum is down. 416.60, that's where I want to get long. 418.60, that's where I want to take profits. 418.60, 419 is where I want to re-enter my trade. Just kind of trying to set up this technical analysis so you guys can understand what I'm looking at here. And anything below 409.46 is definitely a macro flush. Next price point on the S&P 500 is going to be something like 406, 407. I hope that video kind of makes sense. Just wanted to jump on live for a little bit and kind of explain the price action and the way I was looking at the markets today. And until next time, I will see you guys all later.